the question so that I can answer the question.
Okay.
I hope everyone can
So
hear me
I
clearly,
was
right?
saying that based on our analysis, we
Yes, we
can hear
can.
you.
Okay. Go on, Mohali.
Okay. So I was saying that based on our last week analysis, we know that the overall direction is high or bullish direction. But taking into consideration the distance from our entry to where the market was is about 600 and something pips. So I was saying that knowing that, can we take a sell or take the sell when the market break or close below the range, the consolidation range, towards the point of interest, our point of interest? If you can take that sell, is he like
Is he
is he professional to do that?
to get your question? Is he where the market is currently?
No, let's say last week the market was you see where the zigzag is from. If you can point your cursor to,
Yeah,
yeah, the market was close around here.
around which price? 53,700 or 53,500? Around
Just a
this
second.
range. Around this range.
Yes,
Okay, so come with your question. You say if you can take a sell from here to here.
yes. When they close below the range, can you take the sell to the trend area zone where we are waiting for our buy?
It's not professional. It's not professional. You know why?
Yes, sir.
If you have a lot to risk, you can risk it. But if you are to trade conservatively, right? You don't trade like that. I can decide if I look at your state, to me, I can even trade on 5 minutes. What I just need to look at, once I see a liquidity sweep from the high, the the least high, let's say for instance, like now, this trade now is moving like this. This market is moving like this. And this is my zone. On 5 minutes, I'm talking about 5 minutes, right?
Yes, sir. Yes, sir.
Right? Then this trend now is moving, the trend is moving here at this level, like this. And when it gets here, do you know that I can decide to take this sell to this place? Because immediately I see a liquidity sweep, I know that the trade, there will be a reversal here before there will be a continuation. There will be a breakout and continuation, right? I can decide to trade this, but why won't I trade it? Because it's not part of my confluence. Number one. Number two, I can't make up to, if I'm what I'm risking, I can't even make up to 1:3 of it. There is one thing you need to understand about trading. You see, trading, if you want to take a trade, always ask yourself, is the risk reward okay for you? Is the risk reward okay if the market goes in your direction? It's not all about seeing an entry and say, okay, it's going to buy. Is the risk reward okay for you? This market now might come and do something like this. When it comes here, do something like this, do as if he wants to sell, do something like this, do something like this. Though he's going to sell, you already know that he's going to sell. But this market might come back here, hit you out again, definitely if you enter here, your stop loss will be here, somewhere here. Then this market will now come back here again, hit you out, do like this, come and still go your direction. Now it has already hitting you out. Number one, because you are not following the trend of the market. Number two, you are trading everything you see in the market. Number three, you did not calculate your risk to reward. I don't know if you understand.
Yeah, I get you, sir.
Yeah. So if you are trading, it's not only all about the trade, is what is my risk to reward? Where is my stop loss big? Am I risking normal 100 pips or 150 pips to catch 300 pips or 400 pips? This is the first thing you have to consider. You have to put into consideration before you take the sell or buy. It's not just trading anything you see. You can be if you decide to be trading anything, that means you can be seeing entry any, like in one minute you can be seeing entry, but that's not how we trade. That's not how to trade. You understand? That is why we do analysis. You wait for your candle, the market to come to your entry. You confirm, you check your risk to reward. That's why you do analysis. You check your risk to reward, then you enter. Right? So as this market is now, even if we decide to see and enter, this market come down here, we'll decide to enter. We are going to have enough risk to reward. Enough risk to reward, which is about 1,000 something pips, 1,500 pips thereabouts. Then how much are we going to be losing, if at all we are going to lose? We are going to be losing, let's say, 150 pips. That is what you calculate when you are taking, anytime you want to take trade, not just take trade because you want to take trade. All these things, you have to put it into consideration before you take that trade. I don't know if that's clear.
Yeah, it's clear, sir. Very well.
Very well. Any other question, guys?
I have a question, bro.
Okay. Faith, go on.
So,
Yes, you can hear you. Please be audible.
no, yeah, I'm having a little network issue, so that is why.
Okay. So, come on.
So, yeah, it's about execution. You just talk about it right now. So, it's about execution. So, after analyzing the market in the chart, then when you want to execute the market, is it as in, how do you decide? How do you decide when not to take a trade? Because me, I'm a little confused with my execution model.
Your network is having issue. You mean, how do you decide before you take a trade?
Yes. After
Okay.
analyzing the market,
After analyzing the market, what do you decide, or how do you decide? Now, is that all? Is that all your question? Is that all your question?
I still have one question.
Okay.
What
So now,
condition?
come again. Come again.
What condition must be present before you enter a trade?
What condition? What condition must be present before you enter a trade?
Must be
Is that what you
present,
mean?
yes, before you enter a position.
Okay. Now, first of all, we have confluence. If you watch my video, I listed the confluences that we have. We have confluences that will follow. I think I have it. Our confluences here. I just want to revert back. This is our conference. Now we have confluence. Before we enter a trade, when we analyze the trade, before we enter, these are the things that we check out. Can you see my screen? Okay, we have entry confluences. Before we analyze, these are the things that we look out for. The entry confluences, the psychological level. What is psychological level? I have treated this, is in our video. Number one, the confluences are psychological level. This psychological level is, if the market is here, this is psychological level. At this level, it is called psychological level. Double click. Psychological level. When the market is at every 100 pips is our psychological level. Every 100 pips. Every 100 pips is as every 100. Yeah, can you see?
Yeah.
This is psychological level. Every 100 pips is psychological level of US30. If the market has done 100 pips, is a psychological level. Every 100 pips from here to here is a psychological level. From here, okay, let me use this as my entry chart to show you, because I explained this in the video, in all the videos when we started, I explained it, but let me just go. Yeah, you see from here, this is what is called psychological level. You see all this line that you are seeing here is not an ordinary line. It is called psychological level. You understand? And each of them is 100 pips. Each is 100 pips. Each of them is 100 pips. That's what is psychological level, right? So now, when you are analyzing the market, you have to, psychological level have to be on part of your confluence when you are analyzing, right? It has to be part of your confluence when you are analyzing, right? Which is this psychological level. Number two is trend line. When you start analyzing, you have to get a trend line. A trend line, right? A trend line. These are the things you check before you enter a trade, because you asked, how do we, after analyzing, how do we enter trade? These things have to be intact before you enter a trade, right? We have trend line, we have chart patterns. Our chart patterns, bullish chart pattern is engulfing. That is our chart pattern for confirmation. If
Engulfing candle, yeah.
You know what is engulfing candle? You know engulfing candle, right?
Yeah.
Yeah. So
Yeah,
also
I know both bullish and bearish engulfing.
Yeah, also go through I drop a candlestick Bible for you guys to go and read. Study it very well. You will learn a lot of things, a lot of how candle moves there. You will learn a lot there. So study it very well. I'm still studying it. I've studied it before, but I'm still I want to go back to it and study it again. So now we have CNBC. CNBC is news. It what gives us the clue of what is happening in the US30 market, right? That's CNBC. Then we'll have Fibonacci. This is where we enter. This is what gives us a direction of where we enter the market, where we plan to enter the market, our POI. Like what we did here.
Okay, once price get to that zone.
Yes, once price get to the zone, this is what gives us the idea, okay, this is where to enter. The market has done 50 pips, 50 fib level. It has gotten to 50 fib level. Now, it has retraced enough. The market has retraced enough. That's the highest the market can go on a retracement level or 61 before it starts moving to its normal direction. Do you understand? So now you mark out your fib level, you trace your fib level, you know how to put your fib level. Then the sixth one is your key levels. You know what key levels are. Your key levels is where the market rejected multiple times at the higher time frame, not the lower time frame. Multiple times at the higher time frame. Multiple times. Where did the market reject multiple times at the higher time frame? As you see 4 hours, this is a key level. 1, 2, 3. You see rejections here. The market rejected. Where the market was rejecting. Right? This thing now has already formed, it is now a key level. It has formed a key level. It's where the market has rejected multiple times. Is what we know as key levels. Right? So if you mark this out, then when the market open, you can now, once you mark it out, you've done your technical analysis, you now wait for this thing to come and get to your entry. To come to your entry, you are not going to be trading anything until the market come and start reacting at your entry. That is when you now start looking at, mute yourself, please. That is when you start, that's when you start looking at your entry. Once the market comes there, you now be looking at the chart pattern. What is the chart pattern? The engulfing candle. Will you see it? That's when you see it, you now know that, okay, the market is about to go to my direction. Once you see the confirmation, you enter. If you see that the market has been rejecting at that particular 50% fib level, you already know that, okay, this is where I'm going to enter this market. You still enter, put your Excel, put your stop loss 100 pips below, and wait for the market. That is how it's not difficult to analyze. The market is not difficult to analyze. You wait for the market to now do its own. Once you have done your check-ins, you will now wait for the market to come and play its role. This is how we do it. This is how we analyze the market. There's nothing difficult here. All these things are calculations. All these things was calculated, right? So that is it. Any other question? Seems today is only question and answer you're doing. Any other question? One more question. Let's wrap it up so that we do our analysis. One more question.
Okay. My other account, I have a winning and losing streak. So, how do you handle a losing streak? Because I'm a greedy person.
Okay, when it comes to, I mentioned it. I mentioned it, how I handle a losing streak. If I'm on loss, if my account is on drawdown, how I handle it is that I don't trade until I see an A setup, A plus setup. I don't trade that account. I will hold the account. I will just keep calm and be waiting for A plus setup. I will not just be trading or anything I see. That is why before you start trading, you have something doing. You don't depend solely on trading. You have something that you are doing that is giving you money. Trading is a long-term gratification. because it's not something that you start working immediately. It's a delayed gratification. So you have to have something at the side that you are doing that you don't solely depend on trading. Because if you solely depend on trading, you will not get it right. You will lose. So that's why it's good to have something doing. Then you'll be learning trading as a skill at one side. So when you now mastered it, now start scaling up, or you now start investing in it, right? So now you just need to know, you just need to master the trade. Once you master the trade, you scale gradually. You scale from point A to point B, from point B to point C. But while you are doing that, still have something that is giving you money by the side, so that psychology, emotions will not vetching. It is very, very important, because if you don't have something that you are doing, if you solely depend on trading, your mindset, your emotions, everything will be there. So when you are losing, you you mess your psychology up. So it's very, very important. It's very, very, very important. So that is it. So another thing I want to add up is, if you don't have journal, try and get a journal for yourself. Always write down your mistakes and your wins, how you win the market, how you made profits, how you made losses. Always. It helps you not to repeat any loss. It helps you, even if you are going to make, let it be a new type of loss you are going to make. Let it not be a repeated loss. Let it not be a repeated loss. Let it be a loss that, okay, this is a new kind of loss. This is the way the market moves. You write it down. The more you do it, the more you are growing. The more you are growing, the more your knowledge is in trading is growing, and the more experience you are building for yourself. Because what you know now, someone that just started trading does not know it. You have already surpassed the person. How do you surpass the person? Because you have experience more than the person. So that's how it is. I hope that's clear. I hope that is clear.
Yes, sir.
Yeah.
Yes, sir.
Yeah. So first of all, have something doing that's giving you money. Then forget about greed. If you follow greed, leave greed. I was greedy when I started. I was greedy, madly greedy. I lost a lot of money, and I now realized that, okay, if I want to make it in this, I have to. There is nobody that doesn't have greed, but you have to manage your greed. Know when to be greedy. You have to manage your greed very, very well, very, very essential. But if you are being greedy, know what you are getting greedy on. If it's A plus setup, you want to use greed, know what you are getting greedy on. Not just all trade you see, you just enter because you want to make money. So that is it. We are going to do our analysis, then we'll see what the market holds for us for the week.
Okay, sir.
Yeah. So I want you guys, everyone, each and every one of us know how to analyze the market, right? We know how to analyze the market. Is there anybody here that doesn't know how to analyze the market? Hmm? Is there anybody here that doesn't know how to analyze the market?
President should go to.
You don't know how to analyze the market, Faith?
No. I can analyze the market.
Okay, okay. Very well. So mute yourself. Mute yourself now. Mute yourself. So Now, we'll analyze the market. First of all, what we are looking at when we want to analyze the market, the highs and the lows. The highs and the lows is high, resistance, support, sentinel resistance, support, highs and lows. That's the one thing we are looking out for. We are marking out also highs and lows, right? Our highs and lows. So now this is our high, then this is our low. I'm seeing another rejection here. So we're going to bring out our rectangular, we'll bring out our rectangular on the weekly. This is another low, rejection, multiple rejection. Right? So now we go down to the daily. Sorry, I see another rejection here. Just keep it by this level. So we go down to the daily. So looking at the daily, you see, we bring down the trend line. Remember trend line? I talked about it. Our trend line, you see, the trend line has to have at least 2 to 3 touches before it is confirmed valid. Before you can confirm it as a valid trend line. If it's not more than 2, it is invalid. Take note of that if you are not aware. So now, what else are we looking out for? What else are we looking out for? Now we see that the market has, on the 4 hours, we see that the market reacted at here. This is a psychological level. If you check very well, this is a psychological level here. There is key level here. There is trend line here. This is 3 confluences. Maybe 4 of our confluences. Psychological level, key level, trend line. These are 3 of our confluences that is here. So that you guys will see what I'm doing. Right? Psychological level, because this is, if you watch very well, this is the market tap at 852,800. 52,800 at this level. And there is trend line there. There is trend line here, right? There is trend line there. So the market tapped at it, then couldn't push below, started going up, right? So what are we going to be looking out for? We just have to track our Fibonacci from here, where the market to where the market is currently. We'll drag it to where the market is currently. So now we've gotten 61% fib level. We've gotten the 61% fib level. It's 1% fib level. So now, what are we going to be expecting? A little retracement for the main push-up. A little retracement for the main push-up. From this level to this level. First entry. Second entry. If the market couldn't push here, couldn't come down to touch a 38% fib level or close to 50% fib level, we take it up from here to this level. Is that clear? Because I am expecting the market to do a bit retracement to push up, to take us up again. So I'm expecting the market to do a little retracement, then take us up again. Then I'm seeing a trend line at this level. I'm seeing a trend line, a downtrend line at this level. So if this doesn't occur, or let's say, let me put this here like this. If there is a breakout from this trend line, we wait for retracement, then we'll enter. If this doesn't happen, we wait for this retracement, a push out from this trend line, a retracement, then we'll take it up. Is that clear? Is that clear? Is that understood?
Yes, sir. Thank you. Yes.
Is it clear? Do you have any question?
Yes.
Do you have any question?
Nothing from me, sir.
But you guys should do your own analysis. Also do your analysis, because one thing with trading, the more you analyze on your own, you master it, the more you become confident. The more you build your confidence. You are not building it for me, you are building it for yourself. You build your confidence. And you know that when the market goes your direction, you know that, yes, I'm improving. Even if you don't take the trade, you know that you are improving. You keep doing it. Since we started trading, I've not changed my strategy. I've not changed my edge. This is what has helped me from level A to level B, from level B to level C. So if I can make it with the same strategy, the same edge from level A to level B, from level B to level C, it shows that the strategy is working. I don't know if that's clear. It shows that the strategy and the edge is working. If it's not working, there could have been a sign through this process, right? So what is left is for you to get involved, kill emotion, kill psychology. When the trade comes to your entry, take it. Just know how much you are risking. Just know how much you are risking. I think I have to emphasize on this, that what happens to us most times is that sometimes we are afraid to take trade. Sometimes we are afraid to take trade. Or maybe when you make first loss, you'll be afraid to take the second loss. That is why you need to calculate the losses that you're making. You need to know your risk whenever you want to take a trade, so that you will not be scared. You will not be scared to enter a trade. It is the same way I do. If I know that I have entered this trade and this trade hits me out, and I know that my analysis and the trade is the market is still dancing around that place, I will enter again. Sometimes I enter trade like 3 times, the same position. It will hit me out, I will enter again. It will hit me out, I will enter again. And after, it will go to my direction. Because number one, I know that, okay, these are all my confluences is at that level. That is going to, as in, this thing I'm saying is something that you already have confidence in it. But if you don't have confidence in your analysis, your strategy, you'll be scared. But of me, I have built confidence in such a way that unless I took a trade that is not up to 4 of my confluences, that's the confluences that we are using here. Unless I did not take trade from there. When as much as I took trade from there, I know that anything that is happening is the institution, liquidity. I will enter to the market, and when it moves my direction, I will recover all the money I lost and make profit. This is how I trade. It's not that I don't make losses. I make losses even more than you guys. But how I manage it is what matters. Because I trade big accounts, is how I manage it. Right? So that is it. I will copy this. I'll paste it. I have pasted it, right? Okay. I think I've dropped it already. Yeah, I've already dropped it. So that is it. Do we have any question? We are going to be looking out for this. Do your analysis. Do your analysis. Check your entry. Check your entry and post on our group. And let's see this week. This week is going to be profitable for us. We pray. This week is going to be profitable for all of us. So do we have any contribution? Do we have any suggestion before we'll call it a day?
No, sir. No question for me, sir.
Do we have any contribution? So everything is clear, isn't it?
Hope you will drop this video because I have to go back.
Faith, your network.
Lessons.
Come again.
Okay. Hopefully you will drop this video because I will have to go back. I missed something in my analysis when you were analyzing based on because of my network. You know.
Okay, I'll drop the video. The video is being recorded. I'll drop the video when I'm through. And you can go and watch
Okay.
it. Yeah.
I appreciate that.
All right. Okay. We are going to call it a day from here. So I wish you guys a happy week ahead. And this week is going to be profitable for all of us. Right? So
Thank you
we'll
very
call
much.
it, we'll call it a day. Bye, guys. Is there another thing we're going to communicate in the group? All right, guys.
Okay, sir.
Have a nice day and enjoy your week.
Thank you.
Bye,
You too.
Thank you very much.
Bye. Bye,
Bye.
guys.
Bye.